Welcome to Cyber Rules, everyone. If you just look at Tesla stock, it sure seems Tesla's not doing very well at all as a business. After all, the stock at $206 is the same as it was back in December 2020, 4 years ago. On the other hand, we'll show you today how Tesla is the only automaker making a profit in electric vehicles, with BYD now starting to falter. New investors are now getting the Tesla story with energy and autonomy, and the AI boom is just starting. So we've got the bulls here with us today. I'm Herbert Ong.
I'm Alexandra.
I'm Simon Hale.
I'm Jeff Lutz.
I'm Xander Sky.
Well, thank you very much, Simon. Thank you for joining us today. So Simon is a portfolio manager. He's a senior wealth advisor for Wellington Altus Private Wealth. They are managing $30 billion. They manage investments for wealthy families in North America and abroad. So today we're going to cover a number of good topics. The first one is there are now new Tesla investors coming on board. I also like to talk about the investors who have left Tesla. We'll talk about Nvidia, of course, and the AI valuations that we're seeing OpenAI now to potentially valued at $100 billion. And then we'll cover BYD and Li Auto and other automakers who are starting to fall. So thank you very much. Let's get started with the first story here, which is the new Tesla investors. Don't know if you guys saw this. Tesla stock, a new analyst is now covering and starting to recommend Tesla share because they think that Tesla is like an ecosystem that's Apple-esque. There's a new bull on Wall Street. This is William Blair, and they are talking about Tesla Energy. And they see that with Tesla Energy, combined with everything else that Tesla's doing, which requires energy, that they think this is now something that's going to basically shift the narrative, and it's something that's going to be underappreciated potential is something that is not being added on to this story. Let's start with you, Simon. What's your thinking? You're a long-term investor for Tesla, but we're now starting to see this more and more. Is this a trend? Is this just a one-off?
Look, our view, and I posted this actually in our most recent newsletter, and I've talked about it right after the earnings call. I'm surprised it's taking a lot of Wall Street analysts time to recognize this. It's really just right in front of you, and Tesla Energy produced almost $1 billion of profits this quarter, and like we discussed this before, that over the next 2 years, their Shanghai factory, which is ramping up and it's ahead of schedule, can do 2 to 3 times as much production of energy battery units or the mega packs as they are in North America. So you start looking at this and you add it up, and they could, by our estimates, they could do 12 to 16 billion dollars in profits by 2027. And just to put that in perspective, that's basically the last 12 months of all of Tesla's profits in all of their businesses. So it's nice to see that some of the Wall Street analysts are waking up to this. I don't think they're the first to do so, but I think it's huge. And regardless of what their vehicle sales do over the next 24 months, you already see a way that they could achieve a 50% volume or 50% growth in earnings over the next 18 months or so just from energy. So it's a good sign that more people on Wall Street are waking up to this.
The company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
Looking for the red flags. You're supposed to react.
Yeah. I love that. Actually, I had you on right after the Q1 earnings call. You had this, evaluation about the energy being 3 times larger than what people were expecting. And then you were on Tesla, other traditional multimedia channels out there talking about this as well. So hopefully some of these institutional firms heard that. The other person that's on quite often is you, Alexandra. You've been being interviewed now, which is great. Thank you both to represent the Tesla investors. And I wanted you, Alexandra, to refer to this, right, which is that stock has been trading the same valuation today as it was in December 2020, right? This is Pagey, Curious Pagey was put this list together, which I thought was great. 4 years of no movement for the stock, but the company, on the other hand, 4 times on vehicle sales, 3 times in revenue, 21 times in earnings, energy sector growing exponentially, FSD, about to reveal robotaxi, Cybertruck, we're 12 months away from releasing new models. Why is it that some of us are long-term investors, others couldn't handle the volatility, they've left? Can you speak a little bit about that?
Sure, with pleasure. So first of all, the December 2020 stock market was not the same we have today. We had a zero interest rate environment, and it was just a completely different situation. Then it's not as if the stock didn't move. It moved a lot during all this time. It just is back at that point now, which is honestly, if you're an investor, actually a great basis to invest, because we're just in such more solid company. But that you're right, that gives me actually a good trampoline to speak about something I've been pondering for quite a while. I do believe that we're much too obsessed about short-term stock price volatility. Now I get it. Obviously, it's Simon's job. It's a lot of people that do options. They have that vision, but a lot of people that watch us don't. They bought Tesla with a clear vision to hold it for, I don't know, 3, 5, 10 years or whatever time it takes. So if you do that, if you are clear about your long-term vision, you're actually spoiling a part of the fun by being so focused on daily movements, on what the company could do differently, what Elon could and should do differently. And it really takes some of the excitement and joy and determination that you have for your company away, because that's the other thing. As a long-term shareholder, you should really feel that this is your company. Now, why did this all, what triggered me this week was Ross was actually on the same channel Simon and I were on, to name it, it was Yahoo Finance, where he was all negative about Tesla again. And usually I don't even speak about him anymore, but he really triggered me because he was so bitter. And we all know why he's so bitter. I mean, he obviously failed to get on that Tesla board and be heard. And now he spews his hate for I don't know how many more months and years to come. But the one thing that's actually very surprising is he never talks about his Twitter investment. We know since this week that he invested in Twitter, both personally and with his business, and his business partner, Kawasaki, also invested. So all three entities they have invested in Twitter, yet he never complains about Twitter publicly. So why is that? And the same happens to SpaceX investors. I know quite a lot of people who invested into SpaceX for the last couple of years. None of them ever complain. And I just think that there are two issues to it. First of all, you have to be an accredited investor to be able to invest in these early stage investments. But that is not actually so impossible for many of us. It means that an individual has to have a yearly income of 200,000 for 2 years. I think, Simon, you correct me if I'm wrong, and a couple, I think they need 300,000, or you should have a net worth of more than $1 million, excluding your primary residence. So a lot of us could actually be accredited investors if we wanted to, and if we wanted to go into these early stage investments, and then we would not have daily stock prices to follow this whole game minute by minute or even second by second. My point is really that by being a publicly traded company, a stock exchange company, you get distracted, and it actually is a disservice. It's a disservice, of course, for Elon, who has to justify everything. Today we had somebody complaining yet again that there's not enough advertising and there's not enough of this and should be more of that. And so if you accumulate the quantity of criticism the company and its CEO have been under just because it is a publicly traded company, it's just incredible energy that's lost. And the same actually applies to us retail investors, because we feel it. We obviously feel it because we're on X and we're debating with these people. But we pay quite heavily this price for daily liquidity or for minute by minute liquidity. On one point, the free trading that you all think you have is actually not that free. You pay because you're giving away your information on trading. You pay because your stock is lended out for short sellers. There's a lot of things to it that it actually doesn't make it free. And I mean, we all know that the old sense, if something is free, you are paying for it in a different way. And so to have this daily liquidity and to have your free trading, you're actually giving away a lot of things, including the energy and the time you lose on these short-term movements. So I'm not judging. I completely understand that not everybody may have the same long-term vision. But when people criticize me saying, oh, Alexandra, you drank the Elon Kool-Aid or you did this and that, well, no, I consider myself as a long-term Tesla investor. I would be in Tesla if it would be not a publicly traded company. And hence, I don't worry about daily stock prices because I did my research. I know where this company is going. It may take 2 years, may take 3 years, may take 5 years, may take 10 years, but it will get there. And so whether they advertise this year or whether the car comes out in January and March, it doesn't matter in that long game. So thank you for letting me talk about that because I really, it bothered me all week long. I thought this through and I wanted to share it.
Alexandra, I think it's very well said. I to that point, I've always said I wish that the stock market would open once a year and people could make their decisions on how to invest, and then it closes. It doesn't work that way. And my brother, who's my partner, says, my God, why does the mainstream media always have to scare everybody and cause this mayhem in the market, get people day trading? And I said, Michael, we wouldn't have a job if they didn't do
That's true. That's true.
But I totally agree with you that just invest in a company and you don't need this whole daily volatility. And if Tesla were a private company, I would be more than okay with that.
Good, thank you.
Come on, Xander. I'm sure you've got something to talk about, right? This is different than yours.
No, this is right up my alley. In response to Simon and Alexandra, personally, I love the volatility. I learned to love the volatility because I've discovered this mechanism for printing money. So if everything from selling covered calls or doing selling a put, and that's basically a limit order. So I see green every day. I pull a little bit off by trading around the edges. But I think it really just comes down to patience. A lot of people, we see this with the FSD crowd, oh, hardware 3, hardware 4, hardware 5, they have zero patience. And I also think about Buffett and how Buffett talked about when you buy a stock, it's like buying the farm, and you try to buy an asset that it produces something, and you're not going, to your neighbors and seeing how much they're willing to pay for your farm every day. So why do we do that with stocks? That's what people do. So I remind myself of all of the, and this is why shows like this are so good, is we talk about all the, forward-looking things about Tesla. Has it been perfect? No, but are they still creating new products? Are they going in the right direction? So it's good to have your conviction checked every once in a while, but as long as I still see them making the right decisions, I keep it and move forward.
Totally, Xander. If I can just comment on that, when we're looking at businesses, regardless of where the stock is, we just try to ask ourselves, are they executing? That's it. Are they executing? When somebody talks about Apple and they come out with a phone, they say, well, they're getting sued or they're getting this or they're not selling enough phones. Are they providing value to the consumer, and are they executing as a business? Yes, okay, it's a good investment. No, they're starting to fail. They turned into Intel and they're losing market share to the competition. Okay, maybe that's not a good investment, but absolutely, Xander, as long as they're executing, which Tesla is doing amazing executing, then it's still a good investment. I was running on the mountain yesterday with my brother, and I said, I cannot believe that retail investors are so impatient with the Cybertruck. They said it's taken so long to come out, and it was late on the deliveries. And I'm thinking, is there any other automaker who has revolutionized a vehicle and come out with something that is totally spectacular in every single way? No. But the average person doesn't understand or recognize that. I think many in the Tesla community are just like blown away at what they're doing. And if it takes an extra year or two to do so, they're breaking the mold and doing something completely different. And then they just dominate that sector that they go into. And I don't think the average person recognizes that it's not just in the truck. It's something completely different. And it took them a little bit extra to make it. But it's not like
there it is.
When
Yeah.
GM comes out with a new vehicle, they say, okay, here's a new Escalade. And they're just revamping, and they put a couple extra mirrors on, a couple extra sensors, and they say, here's the new Escalade. And that's all the car companies have been doing for the last 50 years.
And I agree. And this morning I spoke to a friend on X about that. You know, Elon may be 5 or 10 years ahead of us. And I think we're about 6 to 12 months ahead of the rest of the industry because we understand the product much better. We understand how it's all coming together much better. But the issue is the typical fund manager, not you, Sam, but the typical fund manager is about 6 months behind, right? They start to understand energy now. I mean, somebody should be slapped to write today that they're starting to see energy. I mean, we were happy that they're seeing it, but how can you just wake up today
so
and
long.
see energy? It's just not possible. So the average fund manager is 6 to 12 months behind. So I just have the feeling we all live in today. They live a year behind. We live a year ahead. Elon lives 5 to 10 years ahead. And then people wonder, oh, he didn't spend enough on advertising. And you just go like, oh, come on. It's such a minor issue. And then the other point, I think that's going to lead you, Herbert, into the next subject. Tesla is the only company to profitably build sustainably these EVs, right? I read an article this morning, or I think yesterday, about Volkswagen. Volkswagen is currently slowing down as much as they can EV production because they're making more money on their traditional cars, right? On the ICE cars. And that's the case for all of them. It's not as if there's just much less demand. That's what you read, but there's also just much less offer because they can't produce them profitably. So Tesla is able to do that, but they do it at a scale where they're sure to sell them. They're not going to overproduce in a period where we have still high interest rates and where just the whole ecosystem is about to shift. So, and I think in China it has shifted. I think we're getting there, but it is incredible how people micro focus on these things with glasses on that are with old parameters and don't understand that we're here in a huge shift of business model. And it really doesn't matter whether there are 100,000 more Teslas in or out. It just doesn't matter at the moment, as long as the ones that are produced profitably.
I want to jump into this conversation. So, you know, the thing about Tesla, right, is that it's extremely extreme. We are all long-term investors. I think all of us here on this panel. Many of the Tesla investors are long-term investors. I'd be curious if anybody knew what breakdown is of long-term investors versus those who do want to play with the optionality. But Tesla is extreme, right? Many of us have invested in Amazon. We have invested in Apple. These are innovation companies that we understand. If you invest in it, just give them time and then they will innovate and the stock will follow. The thing with Tesla, though, is that it is incredibly innovative. But also at the same time, it is one of the most volatile stocks out there. It is literally maybe one of the most volatile. I mean, it can shoot up 20x in 2019, 2020. It can fall from 400 to 100. It just bounces around so much as we wait for these results of these innovation and these business models that are disrupted. We're talking about disruption of industries. The good news is that it's not just one industry. It's multiple industries that they're disrupting. And as they do, the stock will just skyrocket. But in the meantime, there's going to go up and down, but big swings. And that's why I think that people who are long-term investors in Tesla specifically, they have to stomach through massive swings that you may not have to stomach through. I've been through Apple. I've seen massive swings, but Tesla is even more volatile. So for that reason, I can see why it is also a stock that many options traders love to play with, as you can hear Xander talking about, because it is something that you can truly it's big swings. And so I could make some money out of this. So if you're a long-term investor, like you're saying, Alexandra, just remind yourself what you're doing and why you're here and don't get caught up in the day to day. But if you are those option traders, that's why they play the game, because it's that. Anybody comment to my point there?
Tom Nash does a great job talking about this long term, and him and I are kind of buddies, but we have completely different perspectives because, I have this skill set. So I think long term, everything that you hear about, like dollar cost averaging and, buying the dip, as long as you're not, going in and taking your entire portfolio and trying to time it at the top or trying to time it at the bottom of these little micro movements, you're going to mess that up. That is really, really hard to do. But this like logic that, trying to think like Dave Lee, long-term 10x 100x investment, that requires just a calm mind. You're not looking at which recall over there update just got announced. You don't care about these little fluctuations. To be fair, from 2020 the earnings per share was climbing like crazy, and the market was rewarding Tesla for that, and that's why you had that. Now the interest rate environment, it truly, I mean, no one's giving Elon a pass here. That environment causes a slowdown in sales, especially in automotive. So we're at the tail end of it, right? Interest rates are about to get cut, but in terms of product, right? Look, where's the market going to go to, over the next decade? It's obvious that EVs are here to stay, and who sells those. But then you start layering in all the other stuff that we talk about, energy, and these the wave of analysts that start upgrading. Once that happens, it's really good to see, right? It's really good to see when other people put their money where their mouth is and they start making those bets. But I mean, this is nothing yet. We really need 10-10 to give to paint a story, to tell a story of what's coming. And once the retail and Wall Street get excited about it, that's when we'll see that next jump out of that 200 to 250, even one could say 270 range that we've been in. So is there downside? Sure, it's possible. Is there much? I'm not going to try to catch another $20 or whatever it is. So I started deploying, and but I'm still staying away from the leaps for the most part. If I buy one, like yesterday I bought one, I sold it today. It was buy it on red, close it on green, feel good. But obviously not financial advice. I'm a monkey throwing darts.
Okay, thanks. We haven't heard from you, Jeff.
Yeah. I think a lot of this is around, I think you're getting back to the core question. A lot of this is around managing expectations. I think it's a two-way street. It's how Tesla manages expectations of what they're delivering, and then how retail investors manage their expectations of their holdings. And I think what we have to realize is everybody's on different time horizons. But some of the commentary I see, Tesla's a couple days late with a software release, or even a week, and they're literally releasing software that makes a 3-ton machine, move around the world autonomously. People are pounding the table and saying, why is it late, when it's never been done before? So I think there's a whole thing around managing expectations. I think there's targets that Tesla could be giving themselves internally, but not necessarily. Those targets could be different in terms of what consumers could expect. And I think when you're investing in a company that's going after things that have never been done before, like nobody's built EVs at scale profitably. So you're going to have some amount of variation in that process. You can't be like, General Motors in 3 or 4 years ago, say, I'm going to ship 30 EVs by this year, and then, ship 3 or 4 or 5, whatever the number is, because you'll just wildly miss. So I think there's an expectations thing. I think, though, you as retail investors, I think this channel, there's information on this channel. I'm not saying it's advice. There's just information about this business that you have alpha. You are gaining alpha. I watch television. A lot of our viewers watch fintech television, and you don't receive the kind of detail around critical decisions and around critical things that the company's doing that you can hear in a 30-second or 90-second soundbite on TV. And now when you get into these longer form interviews where you have people like Alexandra and Simon that can get up on TV and actually bring these facts out, then it's a different situation. But greater than 95% of what people see is just not good, not helpful information. It's almost like it's a set of like talking points that have been put together and just passed around. EV market stagnating, China's emerging, and all the just the same stale talking points, and not into the detail and rigor of what the company is and what it's going to do over the next couple of years. And I just think we should keep in mind that everybody's got different time horizons. There's people that watch this show and they have a set it and forget it type mentality with investing, and we have people that watch this show that are trading options and trying to time things on the daily or weekly. And we should be cognizant of that. There's people that need exit liquidity. They can't just sit and wait forever. And sometimes there's going to be frustrations, there's going to be questions. I think investors should be able to question the company, question what the company is doing, but do it in a rational, thoughtful way, and do it in a way that can, that's constructive and that could actually drive change versus just sitting back and being critical. And sometimes, if you haven't done some of these things before and been in some of these positions, it's really hard to understand some of the trade-offs and decisions that Tesla has to make. But again, I think the shareholder base should be able to speak out on that. And then, finally, I think we're in an interesting spot now. Other companies have been exposed. First it was the competition's coming, and then at least in the United States and Western Europe, the competition arrived, but they couldn't produce the product profitably. And then it's like, okay, well, China is going to rise, and they're just going to eat everybody's lunch. And now what we're finding is just under some slight pricing pressure, these companies, literally crash their net income, and they run into serious problems as they try to scale, not only within China, but really try to do anything global. They're really tripping over themselves from an operating cost and leverage perspective. So I think there's new realizations out there, and where Tesla is global, they already are at scale and they already are profitable. And now they're working on the next thing. And the next thing is a different profit pool than what the current thing is. And by the time that others may or may not catch up to the current thing over the next, call it 2 or 3 or 5 years, Tesla is going to be a couple of years into the next thing, creating another large profit pool. So I think that's where the conversation revolves around when you're thinking about the name.
Yeah, the thing about Tesla, right? It's not a straight line. Like every year, 10%, 15% growth. It's flat. It's very, very volatile. We're in the 4th year. It could very well be 6 years, maybe 8 years of waiting. But I don't think so, right? Most of us think that 2026 is going to be a breakout year. But when it breaks out, it's not a 10, 15% break. If it works, because it's a disruptive industry that they're disrupting, it's going to be 2 times, 5 times, 10x. That's the game that we're playing. Any last thoughts about the new Tesla investors that have come in, the ones that have been weeded out and investing in Tesla? All right. We covered that well. Thank you, Alexandra. Appreciate it. I know a lot of our audience members feeling the same way you did, and you articulated that well. Thank you for doing that. So we talked about the Tesla investors. Let's talk about AI valuations and Nvidia. There's 2 big events that happened this week that were very, very important for AI. And of course, many people kind of understand that whatever happens in AI, it will show up in Tesla. The first one, of course, is the Nvidia earnings that just happened. And they blew out of the water. They have monster expectations coming out, guidance for next quarter, and yet their stock fell a little bit. People are still questioning whether or not AI is a real deal. Jensen Huang spent 10 minutes. He spent 10 minutes talking about, why are data centers buying these AI chips, and if it's going to actually deliver an ROI on this. In the meantime, we've got things like this. The other thing is OpenAI is apparently in talks right now that's going to value them at $100 billion at this point. So with all this movement, and us Tesla investors recognize Tesla to be the real AI company with real world AI. When do we start to see this happening? Did you want to address that first, Simon?
Yeah, so just to add on Jeff's point is that some of these companies, their earnings and what the companies are doing, and we're talking about generally sort of the Magnificent Seven, Tesla included, as long as they're executing, I'm not overly concerned about the share price, though Tesla is obviously very, very volatile. What I wanted to share with people here today is Nvidia's earnings, and this is, I'm going to share with you my FactSet screen here. There, you can see it there. Let's see if I can exit full screen. So, oh, sorry. I'm going to go to full screen. And because when we're meeting with clients, so I'm just showing you a chart here of Nvidia, let's say over the last 5 years, and this is the stock price in 2022 was at $30 split adjusted, of course, and then it went down to about $11 in towards the end of 2022. It was very, very difficult to own it through that period, and then we see the stock take off. And now it's basically 10x over the last year and a half or so. And then if we take a step back, and what I always try to tell clients is, over a 6-month period, stocks look very volatile.
Mm-hmm.
Over a 1-year period, less volatile. 2 years, 5 years, 10 years. And of course, anyone could look at this and say, wow, I'd love to own that company. But you have to understand the volatility that comes with it. But what I wanted to share with people and how this sort of tunes back into Tesla is, let me share with you the sales of Nvidia. And you saw that stock go from $30 to $11 in 2022. And you'd say, well, why has it done that? Because you look at the sales, and here's the total sales, and they go from, this is the last 10 years, 4 billion, 4.6, 5, all of a sudden it's on everybody's radar. 2017 is kind of when we started investing. We said, wow, they're blowing everybody else. My brother's a gamer too, so he's like, no, Nvidia chips are like next level. And you see every year that their earnings are going up. So 2022, their actually earnings are fine, and then they stagnate and the stock goes down 30%. Now, why I bring this up is that Tesla have had a similar result, but let's just I'll walk you through this. And this is why I think that eventually Tesla will have a very similar experience to Nvidia. So they're going through, and then all of a sudden everybody says, oh, look, they make gaming compute. Okay, so they're gaming compute or gaming GPUs. They all of a sudden fell in 2023 because everybody bought them during the pandemic and they didn't need to get new ones until the following year. But what we started looking at was actually their data center, which nobody was looking at. And I would say this would be similar to like Tesla Energy. Okay, so it's sort of growing, but it pales in comparison to the gaming. And everybody was sort of looking at this and going, well, they're buying it for Bitcoin. Well, Bitcoin's down. Nobody's going to buy their GPUs. But all of a sudden you start to see this, boom, here is the H100 advent, and all of a sudden chatbot or AI, generative AI is created in 2022, 2023, and people wake up to this factor. And between end of 2022 to 2023, you actually saw the stock almost 10x through that period. And then you see the data center, and if you're watching, following the dots, 3x, another doubling. Right now they're in 2025 year, and you see that their earnings. So when people say, oh, is Nvidia expensive right now, or it's a bubble, well, you say, actually, they have actually 5x their earnings, or their sales in the last number of years, and more than 10x in the last 5 years. And that's basically what the stock has done. And then you look at a valuation model on a P, which everybody, a lot of simple people want to look at a P ratio. You say, actually, it's trading, right now we're in 2025 for Nvidia. It's a weird calendar year for them, but we're looking at about 30 times forward earnings on Nvidia, which we think historically is actually a very, very reasonable valuation. So we don't think we're in a bubble for AI at all. Now, if I go into Tesla, and this is where it sort of comes back to how I think that their earnings may be flat for a year or so, but then once robotaxi comes on and energy, so I'm comparing the Nvidia's data center to energy. I'll just pull up Nvidia company. And this is what's fascinating, because Alexandra was mentioning that the stock is trading where it was, 4 years ago, or in 2020. And if you look at their total sales, okay, they were doing $30 billion in total sales, and this year they're going to do 3 times that at $100 billion. Okay, so the stock has been flat, yet they've executed every single year. Yeah. This actually looks like Nvidia. Remember, I showed you guys that Nvidia sales in 2022 to 2023 were actually flat, and that's kind of what we're going through now. Now, these are estimates by, I think there's 57 up here, 57 Wall Street analysts that are following the stock, and this is basically what they're predicting. And I think they're usually they're off, but I'll tell you, the last couple of years they've been actually right. I think this is going to be higher in terms of sales, but this is basically why I believe that Tesla, Energy, and FSD are about to do something similar, but it's going to take Wall Street I'm going to stop sharing here.
Mm-hmm.
I think it's going to take Wall Street to start to get a glimmer of those earnings, and we may be seeing signs of it now with analysts starting to talk about Tesla Energy. And then if we start seeing full self-driving and all of a sudden that explodes, that's where you get this massive revaluation of the company, in my opinion.
Yeah. Thank you for doing that. That's a fantastic comparison between Nvidia and Tesla. So Tesla, OpenAI is now a $100 billion company. Are they worth it?
Let me maybe
agree. Yeah.
Oops, I lost my screen. Can you still hear me? Okay.
Yes.
Let me just recall it. A year and a half ago, it was valued at 29 billion. That was a tender offer that became public. And then less than a year ago, they were in talks at around 86 billion with Talks Investor, and that materialized in February, so only 6 months ago, at around 80 billion. Now the valuation seems to be above 100 billion. So it's just going at a crazy speed. This is 4 times X in 1 year and a half, and it's still very early. So my only thing that I pull out of this is that I really hope that Tesla's board is taking our letter seriously. We wrote a letter about 2 weeks ago with close to 1,400 shareholders signing it, asking them to consider a $5 billion investment into XAI. And I explained then, what it would take. They probably would have to set up a special committee to make sure this is as independent as possible, given that both companies are obviously Elon Musk companies. And then once the special committee has come to a conclusion, and let's say it's favorable, then the board has to decide whether they want to bring it forward to a shareholder vote. They also have to obviously consider what would fair value be. And then we would have to vote for it. I think the earliest would now be November, December this year, if really this is like focused to and becoming a real, target and quick execution. Probably otherwise it would be next year. And I just think we should not lose a lot of time, because you see with the evolution of valuation in OpenAI how quickly these companies become highly valuable. And I hope if we go for it, we're on the train early enough to make it really a good investment.
Mm-hmm.
I don't see why Tesla board would. It makes a lot of sense to have some skin in the game. It's a very small investment for a business that's going to be very capital intensive, and so for Tesla to be invested in this, which they will be using their software or their software, I think it's a very small investment that should be made. Because if Tesla took this on themselves, it's a high capital, high risk. I don't know. In my opinion, it seems like a no-brainer. But again, based on what happened with Tesla purchasing Solar City, I think that it has to go through the proper channels. or else somebody's going to come along and say, "Wait, we're going to class action lawsuit. It wasn't in the best interest. There's another one of Elon's companies, and he sold." You know how it goes. And so, as long as the proper channels are followed, I think it's a no-brainer investment for Tesla.
Completely agree.
It looks like all the Mag 7 or 2 are investing or own these assets. So it makes sense for Tesla, especially given the direction they're going with real world AI, and to have that component inside of the vehicle or the humanoid. It makes perfect sense for there to be greater linkage.
So I heard that the reason why it hasn't yet, why Tesla has not yet invested in XAI is because they wanted to see, who knows if this is true, okay? Somebody told me in the DM, direct message to me, that they needed to wait to see that the Grok is improved to the point that it's going to be very valuable to Tesla. And just when they released Grok 2, XAI just released Grok 2, last week, right? It's now ranking at the top across all categories: math, hard prompts, coding, and instruction following. Here's the leaderboard. And all of a sudden, Grok, this little baby that just was formed, is now at the top. It's in the same tier as ChatGPT 4.0, a Gemini, and Grok. And in some cases, like in math, it's actually surpassed it. And then Elon, of course, is saying that by the end of this year, he expects Grok 3 to be well past all these guys in the leaderboard. So we're already at the point now where Grok is one of the best out there. So.
And that's why I say time is money now. I really want them to focus on it. Time is really money. There's no point doing this next year in June as a shareholder vote. It has to be done as soon as possible.
Well, get in now. They haven't revalued the shares, so Tesla shareholders can get in on the ground level. And honestly, the progress, I mean, you guys have seen it. People in X have seen it. I don't think people, but I demonstrated to people at the office. I demonstrated my kids now. We're writing kids stories on Grok. It blows my mind, and we're comparing it. We're comparing it to ChatGPT 4.0, and we think it's right on par from our analysis of it. And it's just like they've leapfrogged forward, and they have this phenomenal project. I'm so impressed. I don't know how they did it. You guys are probably big followers of the pod as well, All In Podcast, and they've said for the last 6 months that nobody is going to catch OpenAI. And that they have such a substantial lead and financial backing, and to see, and I sort of believe them because they're pretty smart guys. But then watching what Grok has come out with, I said, wow. And then saw the data. I think it was one of your channels, Herbert, but I was looking, actually, they were comparing it on so many different methodologies, that it's like on par with most, and that they really caught up. So it's very mind blowing. If we can get a piece of that, I think it's a wise investment for Tesla.
Well, okay. Well, this is a good debate. Which one would you rather? Which one do you think is going to be the bigger jump in valuation? Right, XAI, just like you said, OpenAI just jumped up. XAI's Grok, or Tesla. Yeah. Tesla being able to use XAI's Grok for the bot and being able to use it for the car, like, the value that it provides it, you're going to be able to speak to it. You can get answers from it. You can give it instructions to do things. It'll understand you, and it'll just be able to communicate really quickly back and forth with you. You know what I mean? Like, which one of these is going to be even a bigger impact?
Yeah, and you're not saying a valuation. You're saying what would have the highest increase in value. And what is XAI valued at today? Is it 10 billion?
25 or 26.
26.
25, 26.
Mm-hmm.
So, 10x totally, 100x. It's a good question, Herbert.
Well, it's a good question, but on the other side, you have to see that Tesla could just license Grok or XAI services, right? And then would have to pay for it, and as anybody else who could license it. So I think the added value really comes from the investment into the company, not just from the usage of the product and the service.
Mm-hmm. I would be more interested in Tesla, and the reason being is that the competition is so fierce in AI, especially in chat. So you've got Facebook or Meta, Google, Microsoft, Amazon hasn't really thrown their hat in the ring, but I know they're working on something. And so the competition is fierce. The data is there, and the compute they have, and they have the money to build the compute, and they're building it. So they're all in this arms race for the biggest compute. So that's why I'm thinking like XAI is in an arms race. Will they win? I hope they do, and I'm really impressed with their advancements. But then when you look at Tesla's business and you say, okay, their EV business, second to none, only company making money, autonomy, nobody's catching up to that. It's just too expensive, and they have too much data and compute. No other car company has the compute. And then you get to the next level up with like Optimus, and nobody else can manufacture at Tesla's scale. So you have like 2 level ups, and the competition is already so far behind when we're looking at Tesla. But when you look at when we look at XAI, it's phenomenal what they're doing, but the competition is fierce, and there's going to be like 1 level up, but even then it's going to be a lot of competition. So I would say Tesla.
Yeah. Jeff, if I didn't call you Mr. Incredible, I'd be calling you Mr. Nvidia. How come you've been so quiet? Come on. What's your thoughts on all this AI valuations, Nvidia?
Well, I mean, Nvidia earnings were good, and they guided higher. They didn't guide as high as the buy side wanted, but they guided higher. And people are talking about, well, now the beats are getting smaller. I mean, come on. When you're doing a product transition like they're doing, that is one of the most difficult periods where you've got to gauge, one of the planes somewhat landing and one of them taking off. But everything they said on the call made perfect sense to me, especially the sequential lower margins as you're ramping the new thing, Blackwell. It's going to be lower yields. They also have more components of the system than they've ever had before. People think they're just shipping a chip, and they're not. They're shipping 7 components of this system and more than what they've actually done before. And there's a lot of coordination that's involved. The change that they're doing, there's much talked about what's going on with Blackwell. I'm sure it's late. And I've never seen them guide to a 3-month quarter on Blackwell. I've heard them guide to the second half of the year shipping the product, and that's what they're doing. But there's a lot of talk about that on X and other platforms. The change that's coming is a super low risk. But at the end of the day, this company, as Simon said, really grew into their valuation, and in successive quarters they've actually become cheaper in many respects than going into the quarter when you look at their valuation on a forward basis. But I think we're in the very early innings of this, and there's just going to be continued growth. Now, OpenAI, it's not clear to me in this smattering of language models of Llama, OpenAI, Claude, and Grok, like, why would this one company command $100 billion valuation? It's not as clear to me as maybe it would have been a year ago versus now. I think the size of these moats, I think XAI proved that they could scramble a company together and as you showed in some of that data, catch up pretty quickly in terms of capability. So I think there's a lot more to this story. I think these companies should command high valuation, but I think the pressure is also going to increase on monetization and that path to monetization. I know that's why Nvidia likes working with Tesla, and I believe Tesla is putting themselves in a position to really close that gap and monetize. Remember, you're not hearing a lot of talk about where is OpenAI's efforts going in terms of end user monetization. They talk about the monthly ARR, they talk about some other things, but in terms of the kind of growth that's needed, you're not hearing about it yet as much. But I think in about a year, you're going to start seeing this whole concept of AI agents and these things taking off pretty rapidly, and you're not going to know what hit you. So this is a space to definitely keep an eye on and keep a sharp focus on. But I do like pulling this whole thing together of XAI and Tesla, and getting that effort closer and closer together is really to the benefit, I think, of both companies. XAI is going to have a partner that can, they can actually put real world AI solutions into, and it can actually be this edge computing solution that does meaningful and useful things in the world. And then Tesla is going to have the capabilities and power and the data center behind XAI in their solutions. I don't think there's any other end solution, whether it's auto or humanoids, where you have this tight of vertical integration as what Tesla could be putting together. So I am a big proponent of XAI and Tesla moving closer and closer together.
Yeah, I'll chime in with, I use Grok for everything now. Now I'm, I drank the Kool-Aid, so one can argue. But I want to, before Grok, I used to say, hey Siri, and then ask it search queries and get answers to questions, and I didn't even have to touch the screen or touch my phone. So I'd love to see that level of integration into the car. I'd love to see that. Obviously, when the bot comes, you're going to want that. If you're not driving, you're being productive, and if you're doing that, you want to be able to ask these questions. And like, I also generated logos for my dad's business using Grok, and his mind was blown. It's just being able to generate an image out of nothing. It's kind of crazy. So I think it's a worthwhile investment as well.
I had just regarding Grok. I had one of our division managers came into my office and was complaining because I had to do an expense report for a staff party that we threw. I said, "Are you kidding me? Now we have to do expense reports. We're a relatively new company, and now we have to be corporate." And I said, "Oh, hold on. I think Grok can do that." He says, "What? What's Grok?" I said, "Watch this." And I really just literally typed in, said, "Please do an expense report. This is what I want in it." It took me, it was 4 or 5 sentences.
What?
This is what I wanted. Yeah. This is the reason why. And it broke it down and it wrote it. And I actually asked it in fun mode. and it put this together, and I said, do it in 200 words. And it put it together perfect. And actually, I didn't even type it. I just talked to it and said, "Please put this together." And it did it. And this manager came in my office. He said, "I can't believe, really? That does that?" Like, so Xander, I know what you mean. You're using it for everything now.
Yeah, I'm just happy that Tesla is not faltering behind or, catching up. They are the leader in, compute. They have massive data centers that they've already built and they're working on. They've got, Grok, a partnership with XAI, to have one of the leading LLMs there. They got the leading bot. They got the leading robotaxi. So it's like, I don't have FOMO. I'm not like looking at other companies going, gosh, I wished, damn it, Tesla did not make any moves into AI, and AI is the next big thing, and we're not there. They actually have a chip. And their Dojo chip, they just was on a presentation just a few days ago. They're talking about Dojo version 2 and Dojo version 3. And they show that they reinvented a whole new network protocol. So it's like not quite, nobody's saying that it's better than Nvidia's chip, but it's getting close where it could be a replacement for it in certain use cases. So even that alone, I don't have necessarily FOMO that, wish Tesla was more like Nvidia.
I think they're using it for inference in their cars currently, correct? Yeah, Jeff, and I
Yes.
think and I think the reason is also you have to think of like total vertical integration. Like, why is Apple making their phones plus their chips and all the software
On their own chips,
yeah, and then why do people complain that it doesn't speak to other, to a Samsung phone as well, and you can't share the photos? And I think of Tesla doing this and saying we need to control the entire experience from the hardware and the software, and they're doing the same thing, and they need to, but they're doing it very, very well. And there's nobody else that's doing that.
Yeah, I think there's also, when you compare it to the smartphone world, people always like to compare Tesla to Apple and then everyone else. But I think there's a significant difference, especially coming from this world. And Apple really closed off their ecosystem. They didn't open up their charging standard, for example, to others to use. When that connector came out, it was well ahead of USB-C because you could insert it bidirectionally. You wouldn't run into all the problems. USB-B was a disaster. USB-A. So there were a lot of things that they could have shared and they didn't do it. and Tesla is just I think they're approaching this really well in a really mature manner in terms of opening the charging network, and then openly talking about licensing full self-driving, trying to improve overall safety of vehicles. So I think there's a pretty big distinction, there's a pretty big difference. And I think they're going to be able to capture a tremendous amount of gross margin for themselves and be highly profitable. But I also think they're going to be able to get scale on some of these solutions when they get out there that, a company with a closed ecosystem would not have been able to get.
All right, let's move on to the last topic here, which is Tesla's succeeding in so many areas, but people forget that they're actually also succeeding in the electric vehicle market. They are not only number one, not only in China, but Europe and US as well, but they're also the only company that is profitable. Everybody says that BYD and all these Chinese car companies, they still think that maybe the legacy auto will succeed. But even BYD and these Chinese car companies are now starting to show that they were succeeding last year, and then they're struggling this year. Only Tesla showing that they have profit. Here's an example. AJ does great work at ALOJOH on X, and he said Li Auto, market value of 22.8 billion, is one of the new Chinese PHEVs and BEV makers. They did fantastic last year where they came out of the gate. They reported second quarter financials, and unfortunately, they're showing you deteriorating financial trends. And virtually all the progress that they did year to date in 2024, we've seen all the progress they saw last year was wiped out now year to date. So it just has perfect case study where how quickly under normal market conditions, the fortunes of an automaker can change. So you can see that revenue increased 11% year over year.
It's not the right chart, Herbert. It's not the right chart.
What do you mean? Oh, gosh.
I can see it.
Jeez. Should have said that like 5 minutes ago.
I tried.
I typed it in the screen.
Oh, yeah, that's helpful.
CEO.
Use your voice.
First time Herbert tells me I don't talk enough.
Just trying to be curious.
All right, here you go. Jesus, guys. Perfect case study. Okay, market conditions here. Blah, 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 blah. Okay, so here's the right chart. Li Auto's revenue increased 11% year over year. Their revenue increased to $4.3 billion. But their gross profits is decreased, and their operating profit is down 71%. Look at that. Just crashed. So they need to figure out why is that? Ask Jeff. Why is that, Jeff?
Yeah, Jeff, why is that?
Well, each of these companies, there's a different story behind them. First off, a lot of people don't understand Li Auto. They just got into EVs over the last year, and I think they're only shipping like a half dozen now, and at lower volumes. Most of their portfolio are hybrid, and most people understand that. You just hear Li Auto, and they think they're in China, and they think they make a bunch of EVs. They don't. So they're going through this transition. And of course, there's pricing pressure. There's significant pricing pressure, both from macro in China, and of course, some of the pressure that Tesla has put on some of the competition. And these companies are struggling. Remember, Tesla's on fairly equal footing. People think of Tesla as this American company and competing in China, and of course, they're going to have a bunch of disadvantage. No, Tesla is run by really smart, really crude, really good negotiators, procurement teams, engineering teams in China, the manufacturing effort in China. They've obviously demonstrated leadership in terms of how to build vehicles, how to reduce process time. They just took the Model Y total process time down 28%, on a similar CapEx set. I mean, these are improvements this is why Tesla is profitable. This is why they have the ability to move on price. The other thing is Tesla offers multiple components within region, whether it's charging, whether now it's insurance. There's a number of different things that they offer. But back to Li Auto, and these companies are struggling under pricing pressure. That's what's happening. The other thing that we're going to go through BYD in a bit, they're struggling under pricing pressure, but they're also struggling to expand globally, and this costs money when you're setting up and trying to expand globally. The other thing is they're also spending, I would say, a lot more on R&D, to go after efforts around self-driving and other things they weren't pursuing before, and these things are costly. So
Yeah,
you would
so
think
is
that
Tesla investing these
Yeah,
full
yeah.
self-driving.
Yeah, of course. And you would think as these companies, you hear about the kind of volumes that BYD is shipping, you'd think that they would, their profitability would improve greatly. But,
Now let's take a
there's
look at
definitely
those numbers.
snacks to run into.
So just to finish off Li Auto, the most important metric is free cash flow, and that's dropped significantly. Look at this, 2 quarters in a row where they're negative free cash flow. At least it's improved since 1st March. Operating margins now only at 1.5%. Things look like it was getting going forward, everything improving, and then it just dropped. Same story with BYD, by the way. This is the key thing. AJ points out that, revenue increased, right? 26%, but it's mostly the hybrids, not the BEVs, which actually fell. And more importantly, BYD's cash burn is a major concern. Second consecutive quarter, they had to slash production, will likely have to slash production in 3rd quarter because they have this cash burn. Their growth will significantly slow in the second half of 2024 because they need to refocus on their hybrids because they're having challenges with the EVs. So this is the opposite of what people thought. They were doing so well with free cash flow in the 4th quarter. That was the first quarter that they kind of surpassed Tesla in sales of BEV. Everybody said BYD's the new king in town. But look what happened in the first half of this. Somehow it just crashed and burned. The only point, obviously, is just that, yes, we're looking at Tesla. We're seeing how their growth is not as high as they used to be. They're still profitable, and they're only company that is profitable at this point.
Yes. And when BYD passed Tesla in 1 quarter of sales last year, I couldn't turn the TV on. I thought my TV was stuck on pause with the same thing at the bottom of the screen. BYD's leader, and it's strange. And now they have 2 quarters of negative cash flow, and you don't really hear a whole lot. But in terms of where this goes, it's going to be interesting to see. Now they're switching the mix. They have very little overlap with Tesla. Everybody wants to make it a BYD versus Tesla thing, but they actually don't compete. When you look at the product offerings and the geographies, they actually don't compete very much head to head. They're at different price points when they're in the same geography. And then when they're in different geographies, obviously they're not competing at all. So it's going to be interesting to see. Now, BYD's put a couple of models above 30,000, a couple of models above 40,000. Let's see how they do. They're getting all their volume. They're using 19 models to get the volumes that Tesla are getting, globally, and Tesla's getting that with 4 essentially. And most of it with 2. And when you have that kind of leverage, Tesla's going to be able to drive their COGS down in a manner that when BYD has to spread that volume over 19, they're not getting the same volume leverage per part that Tesla would be getting. So this is where you'll run into a little bit. You can scale up. You can get a lot of models out. You can get a lot of people. You can stuff channels. You can get a lot of movement. And you can get a lot of volume and get some momentum going. But at some point, all the operating metrics have to come together. You have to have the inventory right. You have to be able to drive your COGS down. If you have too many models, you're not going to be able to drive it down as effectively, and you're going to have too much inventory stranded. So a number of things that I think they have to work through, and then you see them doing this model shift. That's also going to be costly for them to do because of what's in channel, what's been ordered upstream, and so forth. So I say the second half is going to be interesting. You have the China macro, and then you've got this competitiveness with EV pricing putting a lot of pressure on these companies. But you have to go back, and this is where I think you get alpha as a retail investor. If you're properly informed, you can ask a couple of basic questions. When you hear about volume and you hear about market share and you hear about the sales and number of units, you should also accompany that with, are they profitable? Do they have a path? What is their path to break even if they're not profitable? And then where do you see that going? Same thing. It's a challenge for Tesla as well. Their gross margins have declined, sequentially, and they've had some challenges, and it's stagnated a bit. So, but I think Tesla's positioning themselves in the next year. They've talked they're positioning themselves for volume growth, 50% growth in units, producing lower cost models. So Tesla is putting a plan out there. And I think what the markets are eager to hear is, show me these vehicles, show me where you're going to price them, and so forth. And I think that's one component. Obviously you have the FSD component and the robotaxi component out there, but that's where I see it.
Thank you.
I think the
All right.
point, Jeff, if I can just comment on that, is that I received a couple calls from clients about other automakers in the headlines that are being competitive to Tesla. And every time I would have to come back to them and I'd say, and these are very intelligent people. One was a former manager at Merrill Lynch, Canada, now a client. And I said, you do know that they're not making any money on those vehicles. Another client called who owns a number of Ford dealerships and says, you see how many, there's how many Ford EVs they're selling. And I said, you do know how much they're losing on each one. So it felt like I was, I don't know. Felt like I was speaking to somebody, and I said, "It's so simple. If you sell a car for $50,000 and it costs you $100,000, I don't know how that's competitive. And Tesla's selling their cars for $50,000, but they cost them $40,000. Said, so why is that competition? I don't see that. And to Jeff's point, talking about I don't think many investors understand the operating leverage they have, the amount of infrastructure that Tesla has built out, and that cost is not going to increase exponentially, but they have an infrastructure that they can build on, and they can produce a massive amount of profits from that existing infrastructure. And they have all the contracts in place to supply them with the materials they need. And then that's where you start seeing, that's one of the reasons I'm heavily invested personally in Tesla stock. Of course, we own our other client portfolios, but personally. But the reason it doesn't bother me, and I'm not heavily leveraged, so I don't worry about the daily swings of the stock. But the only way that a company can get into trouble, we've never seen a company go bankrupt if they don't have any debt. Debt is the single thing that will break companies. And Tesla doesn't have any debt. Okay, they've got $30 billion in the bank, and every quarter I get up and they have another couple billion and another couple billion, despite the fact that they're building out that infrastructure. So the fact that they have no debt, a massive amount of cash in the bank, and this infrastructure, what I'll be interested to see is what that operating leverage looks like over the next 3 to 5 years, because that's where things get interesting for stocks, because they've got the infrastructure that's built out.
Well,
and to your friend, go ahead.
Sorry, Alexander.
No, so just quickly to your friend who likes Ford, tell them they have now already budgeted $3.9 billion in reg credits that they will have to pay most probably to Tesla, because they cannot get to the quota of EVs they need to produce. So not only are they losing money on every EV, they are slowing down the production of EVs because they're losing so much money on them that they rather not produce them. But at the same time, they're budgeting $3.9 billion set aside for the coming months and years to have to pay in reg credits because they already know they're going to be under target.
Yeah, and then add the 1.9 billion write down that they have to do on capex for them and their suppliers. They'd rather, to Alexander's point, they'd rather write down $6 billion, or shove $6 billion out the door than actually build cars and sell them to customers. Just 10 seconds on the operating leverage piece. I don't think people, it's such a good point, Simon. I don't think people understand Tesla they've already built out, they already have the capex installed to build the 2.5 to 2.7 million cars. Maybe there's some incremental, but they already have that. It's already there. They need to reveal the product and get, obviously drive the orders behind it, but they actually have the capital in place. They don't have to add capital to get to that number. And then the same thing on the supercharger network. The supercharger network is not fully utilized. So as that grows and becomes more fully utilized, that's a big increase in operating leverage. Same with full self-driving and the way that's architected. Big increase in operating leverage as you get utilization growth in it. So they've spent the money already. Now they have to fill it up.
Yeah, and for the listeners out there, I'm mute now. For listeners out there who are wondering about the operating leverage that we're looking at, if you've got a massive infrastructure that is worth, I don't know what their infrastructure is worth, let's call it 100 billion, whatnot. But all of a sudden you have their total cost and then their total sales. Let's say they do next year $120 billion of sales, and you're looking at EBITDA that could be either $14 billion or $30 billion on the existing infrastructure. That could be 100% gang in their total profits or their EBITDA profits. And it's very easy for Tesla to do that at this point, whether it's this year or next year. And it's not going to cost them any more money to do that.
Yeah. All right. Well, just a fantastic conversation. Thank you. We can close this out. I just want to show you guys. I want to flash a photo, and which of you can just the first of you to tell me what this photo what it is the true Tesla fan.
Keeping it clean, right, Herbert?
It's up to you.
Oh,
It's where
what's
your
it
mind
doing?
goes.
What's it doing? Go ahead.
Are you all set? Okay. First one to shout out what this is. Okay.
SpaceX in Las Vegas.
No.
That's a
Boring Company.
Okay.
in Las
Oh,
Vegas.
I'm so embarrassed. Simon wins, and he's not one of the cyber bulls, dude. Guys. Okay. So this
My
is
screen didn't even update.
Yeah,
come
mine
on,
was
don't-
black.
Please. What
Until I heard
excuse?
Herbert.
SpaceX.
You got more
Sure.
technical problems.
All right. So this is Boring Company, and the reason I
Yo,
bring
what are
this
their
up.
names, Herbert? What are their names? Let's go.
Proof I don't know. Proof
Oh,
Rock.
there you
I don't
go.
know.
There you
But
go.
Steve Hill, the president and CEO of Las Vegas Convention, he basically just said that they're not only are they expanding boring tunnels, but they expect it to be implementing autonomous driving aspects within the end of this year. So FSD could be coming to boring in Las Vegas through these tunnels, which makes sense, right?
Yeah.
By the end of this year. Can happen soon. Next
And
month.
the funny thing is, one of the stops that they're just building out is just in front of my favorite restaurant. So
Oh,
can you
why
imagine?
does that matter?
I
No,
can,
why?
because it's me. Come on.
You go to Vegas, you're gonna get like limousines picking you up. You don't need. You want an autonomous
You gotta
drive
be
to
you
your
gotta be
restaurant.
joking. You gotta be joking. I don't want a limousine. I want FSD drive to my restaurant. I'll live transmit it on your channel, Herbert. Then you'll
Oh,
be happy.
Okay,
That's it.
yeah,
See, that's
So-
how I talk to the guy.
that's all it requires. All right, guys. Thank you very much. Thank you, Simon, for joining us. Thank you, Jeff and Xander and Alexandra. Thank you all.
Thanks,
soon.
Herbert.
Thanks, Herbert.
Bye-bye.
Thanks.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.